The commission check should have been $47,300. I knew the exact number because I'd closed the Hartwell Industries deal myself over 4 months of negotiations, site visits, and proposal revisions that consumed my weekends and turned my sleep schedule into a suggestion rather than a routine. I'd calculated the commission a dozen times using the compensation formula explicitly stated in my employment contract, 8% of total contract value for deals I sourced and closed independently, with payment due within 30 days of signed agreement. Hartwell signed on March 15 for a $591,250 contract. 8% of $591,250 equals $47,300. Basic math that a fifth grader could verify. When the commission payment arrived on April 18, 34 days after the contract signing and 4 days late according to policy, the check was for $23,100. Exactly half of what I'd earned. No explanation, no documentation, just my commission cut in half like someone had taken scissors to my compensation and decided I only deserved 50 cents on the dollar for 4 months of work that had generated more than $500,000 in revenue for a company that couldn't spell gratitude if you spotted them the first 8 letters. I'm Jordan Mitchell, and I stared at that check sitting on my desk at Apex Commercial Solutions for a solid 3 minutes trying to understand what mathematical system would produce $23,100 from an 8% commission on a $591,250 contract, before realizing this wasn't a math error, it was theft. I'd been senior sales executive at Apex for 4 years, 2 months, and 7 days, selling commercial HVAC systems to mid-size manufacturing facilities and office complexes that needed climate control solutions and were willing to pay premium prices for quality equipment and installation. I wasn't the smooth-talking sales stereotype who took clients golfing and told jokes over expensive steaks. I was the person who actually understood the technical specifications, could explain why certain compressor configurations worked better for specific building layouts, and followed up meticulously on every detail from initial inquiry to final installation. I drove a 6-year-old Mazda 3 with 134,000 miles on it and a crack in the passenger side mirror from a parking lot incident I never bothered fixing. I lived in a 2-bedroom rental house with a backyard I'd optimistically thought I'd use for barbecues but mostly just mowed occasionally when the grass got embarrassingly tall. My furniture was a combination of hand-me-downs from relatives and IKEA purchases made during optimistic phases when I thought I'd finally become an adult with matching furniture. I wasn't living extravagantly on my sales commissions, I was living carefully, saving for a down payment on an actual house I could own, and apparently getting robbed by my employer who thought I wouldn't notice or wouldn't fight back. The trouble had started 3 months earlier when Apex hired Derek Paulson as VP of Sales, brought in by our CEO with instructions to optimize sales operations and improve profit margins. Derek came from a company that had gone bankrupt 18 months after his departure, but apparently that failure hadn't diminished his confidence in his ability to run sales organizations into the ground. He had that particular executive energy that confused aggression with leadership, wore expensive suits that he'd mentioned the brand names of during casual conversations, and used phrases like maximizing shareholder value when discussing why he was cutting commissions that salespeople had earned through actual work while his own compensation package remained mysteriously generous. His first move at Apex was announcing that all commission structures were being recalibrated to align with industry standards and company profitability objectives. Translation: we're cutting your pay and calling it strategic alignment. He held a sales team meeting on February 8 in the main conference room that smelled like old coffee and broken promises, where he presented a PowerPoint deck titled Sales Compensation Optimization Framework, that was basically a 30-slide justification for paying us less money for the same work. We're implementing a new commission split structure for complex deals, Derek announced, clicking a slide showing the new formula that looked like it had been designed by someone who failed algebra. For deals requiring technical support, proposal development assistance, or installation coordination, commissions will be split between the sales executive and the support team. I raised my hand. Our contracts already specify commission percentages. 8% for independently sourced and closed deals. Are you changing our employment contracts? Derek's smile got tighter. We're not changing contracts, we're clarifying how commissions are calculated when deals involve multiple team members. It's about fairness and recognizing everyone's contributions. My contract says 8% for deals I source and close. The Hartwell deal I'm working on right now was sourced entirely by me through cold outreach, developed through 4 months of solo negotiations, and will be closed by me without requiring support team involvement beyond standard installation scheduling. That's an independent deal. 8% commission, correct? We'll evaluate each deal individually to determine appropriate commission splits based on actual resource utilization. Translation: we'll decide after the fact how to justify paying you less than your contract specifies. The Hartwell Industries deal was mine from beginning to end. I'd identified them as a prospect through industry research, cold called their facilities manager in November, scheduled an initial meeting in December, conducted site visits in January, prepared a comprehensive proposal in February addressing their specific climate control challenges, negotiated contract terms through multiple revision cycles, and closed the deal on March 15 with a signed agreement for $591,250 covering equipment, installation, and 5-year maintenance contract. Our technical support team had provided standard equipment specifications, which they did for every deal. Our installation team had provided a timeline estimate, which they also did for every deal. Neither team had been involved in sourcing the client, building the relationship, or negotiating the terms. This was an independent deal by any reasonable definition, earning me 8% commission per my contract, $47,300. On March 22, I submitted my commission claim through Apex's sales portal, attaching the signed contract, deal timeline showing I'd sourced and managed the entire sales cycle, and calculation showing $47,300 due based on 8% of $591,250. The system showed my claim as pending review by sales management, which was standard procedure. Commission claims typically took 2 to 3 weeks to process and pay, so I expected payment around early April. On April 3, my commission claim status changed to under adjustment, with a note saying, commission calculation being revised per updated compensation policy. No specifics, no explanation of what adjustment meant or why it was necessary. I emailed Derek asking for clarification. His response came back 3 hours later: your claim is being reviewed to ensure appropriate resource allocation recognition. The updated amount will be processed shortly. On April 18, the check arrived for $23,100. Exactly half my contracted commission. No explanation, no breakdown showing how they'd calculated the reduced amount, just half my money missing with apparent expectation that I'd accept it without questioning. I walked directly to Derek's office on the second floor with its view of the parking lot and its motivational posters about teamwork and excellence. He was on a phone call but waved me in, finishing his conversation about golf handicaps before acknowledging my presence. "Jordan, what can I do for you?" I put the commission check on his desk. "This is half of what I'm owed for the Hartwell deal. My contract specifies 8% for independent deals. This is 4%. We determined the Hartwell deal required significant support team resources, so we're splitting the commission 50-50 between you and the support team fund." "What support team resources?" "I sourced the client, conducted all meetings, prepared the proposal, and negotiated the contract. Technical support provided standard specs they provide on every deal. That's not support team involvement warranting 50% commission reduction. Our evaluation determined that technical input was critical to closing the deal, so we're recognizing that contribution appropriately. My contract says 8% for deals I source and close independently. You can't retroactively decide to split my commission without contract modification." Derek's expression hardened. The commission structure allows for resource allocation adjustments based on deal complexity. We're exercising that provision. There's no such provision in my contract. I have a copy. Want me to get it? "Jordan, you can either accept the adjusted commission or we can discuss whether you're a good fit for this team going forward. Your choice." Threat delivered with corporate polish. "Accept the theft or lose your job." I left his office, went back to my desk, pulled up my employment contract from my personal files, and read every single word of the compensation section. Clear language: sales executives shall receive commission compensation equal to 8% of total contract value for deals sourced and closed by sales executive independently, payable within 30 days of contract execution. No language about resource allocation adjustments. No provisions for retroactive commission splits. No ambiguity about calculation methodology. Derek had just stolen $24,200 from me and threatened my job if I complained about it. Now, about 85% of you are listening to this while doing 3 other things, and you haven't subscribed yet. That's like watching someone get robbed, seeing them figure out who did it, and then leaving before they call the police because you're not really into drama. Hit subscribe right now. Because what happens when you steal commissions from someone who understands contracts and knows that tax authorities really care about unreported compensation is spectacularly satisfying. That evening, I called my cousin Marcus, who was a CPA specializing in small business taxation and employment tax compliance. Marcus had helped me with tax questions before, and I trusted his judgment about financial regulations. Marcus, question for you. If a company pays me a commission but withholds part of it without proper documentation or reporting, are there tax implications? Absolutely. If they're paying you less than your contract specifies but reporting to the IRS that they paid you the full amount, that's a reporting discrepancy that could trigger audits. Why are you asking? I explained the situation: contracted commission of $47,300, actual payment of $23,100, no documentation of where the other $24,200 went, and the company claiming it was allocated to a support team fund that I'd never heard of before. Marcus was quiet for a moment. Jordan, if they withheld $24,200 of your commission, they need to document where that money went. If they created some kind of support team bonus pool, that money still needs to be reported as employee compensation to whoever received it. If they're not reporting it as compensation to anyone, that's potentially unreported income, which is tax fraud. And if they're reporting on your W-2 that they paid you the full $47,300 when they actually only paid $23,100, that's also problematic because you'll be taxed on income you didn't receive. How would I know what they're reporting on my W-2? You won't know until you get your W-2 in January. But if they're withholding commission without proper documentation and reporting, there's a good chance they're handling the tax reporting incorrectly too. Companies that are sloppy about compensation tend to be sloppy about tax compliance. What should I do? Document everything. Keep copies of your contract, commission claim, payment records, and any communications about the commission adjustment. When you get your W-2, verify that it matches what you actually received. If there's a discrepancy, you've got grounds for both an employment claim and a tax reporting complaint. I spent the next week documenting everything: my employment contract with commission terms, the Hartwell deal timeline proving I'd sourced and closed it independently, my commission claim submission showing the $47,300 calculation, Derek's email saying the commission was being adjusted, the $23,100 check, and emails from 2 other sales executives who'd also had commissions reduced under Derek's new resource allocation policy. Turns out I wasn't the only victim. Sarah Chen had closed a $380,000 deal in February and received 60% of her contracted commission. Mike Rodriguez had closed a $450,000 deal in January and received 55% of his contracted commission. Derek was systematically stealing from the entire sales team, calling it commission optimization, and apparently assuming we'd either accept it or quit quietly. On April 25, I sent a formal written complaint to Apex's CEO Robert Chang and the CFO Patricia Kim, documenting the commission theft, attaching evidence showing my contracted rate versus actual payment, and requesting immediate payment of the $24,200 withheld from my Hartwell commission plus full investigation of Derek's commission adjustment policy. Robert responded on April 27 asking to meet. We sat in his office on April 30, along with Patricia and Derek, who looked like he'd rather be anywhere else. Jordan, Derek has explained that the commission adjustment was based on resource allocation policy for complex deals requiring technical support. There is no resource allocation policy in my employment contract. I have 8% commission for independent deals. The Hartwell deal was sourced and closed entirely by me. Derek unilaterally decided to withhold half my commission without contractual basis or my consent. Patricia jumped in. The commission split was allocated to a support team incentive fund recognizing contributions from technical staff. Show me documentation of this fund. Show me where my $24,200 went. Show me who received it as compensation and how it was reported for tax purposes. Silence. Patricia and Derek exchanged glances. The fund is managed internally as a discretionary bonus pool, Derek said carefully. So the $24,200 you withheld from my commission is sitting in some account you control, and you haven't paid it to anyone as compensation yet? More silence. That's not a commission split for resource allocation. That's commission theft. You withheld money I earned, claimed it was for support team contributions, but haven't actually paid it to the support team. Where is my money, Derek? The meeting ended without resolution. Robert said they'd review the situation and respond within a week. I left knowing that they weren't going to voluntarily pay me what they owed, and that I'd need to escalate this beyond internal complaints. On May 3rd, I contacted an employment attorney named Rebecca Foster who specialized in wage theft and commission disputes. She reviewed my documentation and gave me a clear assessment. This is textbook commission theft and likely breach of contract. They can't unilaterally change your commission calculation without modifying your employment contract. The fact that they're withholding commission and claiming it's in a discretionary fund they control makes this even worse. We should file a wage claim with the state labor department and potentially a civil lawsuit. But Rebecca also mentioned something interesting. If they're reporting this incorrectly for tax purposes, either by not reporting the withheld commission as income to anyone or by reporting on your W-2 that they paid you more than they actually did, that's a separate issue you could report to the IRS. Tax authorities take unreported compensation very seriously because it affects employment tax calculations. On May 8th, I filed a wage theft complaint with the State Department of Labor documenting the commission theft. On May 10th, Rebecca sent a demand letter to Apex requesting immediate payment of $24,200 plus interest and attorney's fees. Apex's response came on May 15th from their corporate counsel. They were standing by Derek's commission adjustment, claiming it was within their discretion to allocate commissions based on resource utilization, and suggesting I accept the paid commission as full and final settlement. On May 20th, Rebecca filed a civil lawsuit for breach of contract and wage theft, seeking $24,200 in withheld commission plus damages and attorney's fees. The case proceeded through discovery over the summer. Apex had to produce documentation of Derek's support team fund and show where my withheld commission had gone. What they produced was devastating to their case: a discretionary account controlled by Derek containing approximately $340,000 in withheld commissions from multiple sales executives over 4 months. The money wasn't being paid to support team members. It was just sitting in an account Derek managed, with occasional disbursements to executives including Derek himself for performance bonuses that coincidentally happened to come from an account funded by stolen sales commissions. Derek had created a slush fund using our commissions, was paying himself bonuses from it, and calling it resource allocation. In August, my cousin Marcus called with an important reminder. Jordan, make sure you track exactly what commission you were actually paid versus what your employer reports on your W-2. If they report the full commission amount but only paid you half, you'll be taxed on income you didn't receive, and that's something the IRS needs to know about. I started monitoring my pay stubs carefully. My August pay stub showed year-to-date commission income of $87,400, which was correct for commissions actually received. But I knew my contracted commission based on closed deals should have been approximately $143,000 year-to-date. There was $55,600 in commissions I'd earned but hadn't received, sitting in Derek's slush fund. In November, 2 important things happened. First, Rebecca negotiated a settlement in my lawsuit. Apex agreed to pay $24,200 in withheld Hartwell commission plus $15,000 in damages and attorney's fees, totaling $39,200. The settlement was finalized on November 18th, and I received payment on November 22nd. Second, I started planning for tax season. If Apex reported on my W-2 that they'd paid me commissions I hadn't actually received, I'd have a major problem. I'd be taxed on money they owed me but had withheld. January arrived with the W-2 season. My W-2 from Apex showed total wages of $148,600 for the year, $65,000 base salary plus $83,600 in commission income. But according to my records, I'd actually received only $87,400 total compensation, $65,000 salary plus $22,400 in commissions actually paid before the settlement. The settlement payment of $39,200 had been paid in November but wasn't included on my W-2 because it was classified as legal settlement rather than wages. My W-2 showed $61,200 more in income than I'd actually received. The money Apex had withheld from my commissions, sitting in Derek's slush fund, was being reported to the IRS as income paid to me even though I'd never received it. This was exactly the problem Marcus had warned about. On February 3rd, I called Marcus. They reported on my W-2 that they paid me $83,600 in commissions. I actually received $22,400 in commission payments during the year. The rest was withheld and never paid to me. That's a significant reporting discrepancy. If they're reporting they paid you income you didn't receive, either they're misreporting your income or they failed to pay you wages they reported as paid. Either way, it's a problem. Did they report paying the withheld money to someone else? I don't know who else they're reporting it to. Derek had a slush fund with $340,000 of withheld commissions. Some went to executive bonuses. Most are probably still sitting in the account. Jordan, if they withheld $340,000 in employee commissions and aren't reporting that money as wages paid to someone, that's likely unreported employment income. The IRS cares about that because it affects employment tax calculations. Companies have to pay employer-side taxes on all wages paid. If they're withholding wages and not reporting them as paid to anyone, they might be avoiding their employment tax obligations. What should I do? File your taxes accurately based on what you actually received. Then file IRS Form 3949, a reporting suspected tax fraud. Explain that your employer is reporting W-2 income they didn't pay you, and that they're withholding employee commissions in accounts that may not be properly reported for tax purposes. The IRS takes this seriously because it affects both your tax liability and the company's employment tax obligations. On February 10th, I filed my federal taxes reporting income of $87,400 based on actual compensation received, not the inflated $148,600 on my W-2. I attached a statement explaining the discrepancy. W-2 shows commission income not actually paid due to employer withholding documented in legal settlement. On February 12th, I filed IRS Form 3949-A, Information Referral, reporting suspected employment tax fraud by Apex Commercial Solutions. The form asked for a detailed description of the suspected fraud. I provided everything: my experience with withheld commissions, Derek's slush fund containing $340,000 in employee commissions, the fact that Apex was reporting W-2 income they hadn't paid to employees, and the pattern of commission theft affecting multiple sales executives. I attached documentation, my employment contract, commission calculations, payment records, W-2 showing discrepant income, legal settlement agreement proving Apex had acknowledged withholding my commission, and discovery documents from my lawsuit showing Derek's discretionary account funded by withheld employee commissions. The IRS doesn't tell you when they open investigations, but they do act on credible reports of tax fraud, especially involving employment taxes, which are a major focus area. In April, something interesting happened at Apex. The entire sales team received notice that the company was conducting an internal audit of compensation practices, and that we should retain all records related to commissions earned and paid over the past 3 years. This was corporate speak for, "We're being investigated and need to get our documentation in order." In May, Apex's CFO Patricia Kim suddenly announced her resignation to pursue other opportunities. Derek Paulson was placed on administrative leave pending review of sales operations. The official communication was vague, but workplace gossip suggested that external auditors had found significant problems with compensation reporting and employment tax compliance. In June, I received a letter from the IRS indicating they'd processed my amended tax return reflecting actual income received, and that I'd receive a refund for the taxes I'd overpaid based on Apex's incorrect W-2 reporting. In August, Derek Paulson was terminated from Apex. The official reason wasn't disclosed, but according to former colleagues still at the company, an IRS employment tax audit had uncovered massive discrepancies between W-2 2 income reported and actual wages paid, plus employment tax underpayment resulting from unreported commission distributions from Derek's discretionary fund. The penalties for employment tax fraud are severe. Companies that underreport wages or fail to pay proper employment taxes face penalties of up to 100% of the unpaid taxes plus interest, and responsible individuals can face personal liability for willful violations. In October, Apex announced they were implementing new commission tracking systems and conducting a comprehensive review of all sales compensation over the past 3 years to ensure accurate reporting and payment. Translation: the IRS audit had found enough problems that they needed to go back and fix years of improper commission handling. In December, I received an unexpected check from Apex for $31,400 with a letter explaining it represented correction of prior year commission calculations plus interest. Turns out when the IRS audits employment compensation, companies often discover they owe employees money they'd previously withheld or miscalculated, and they pay it retroactively to correct their reporting and avoid additional penalties. The $31,400 was commissions from other deals during my time at Apex where Derek had applied his resource allocation adjustments. Apex was now paying me the full contracted commission amounts because the IRS audit had determined their withholding wasn't properly documented or reported. I'd fought for $24,200 in withheld Hartwell commission. Through lawsuit, settlement, tax reporting, and IRS intervention, I'd recovered $94,800 total, the original $24,200 withheld, $15,000 in damages and legal fees, $24,200 in tax refund from corrected reporting, and $31,400 in additional commission corrections. Derek had tried to steal $24,200 from me. The consequences of that theft, once the IRS got involved, cost him his job and cost Apex hundreds of thousands in back payments, penalties, and interest. 2 years later, I ran into Derek at an industry conference. He was working as an independent consultant, unable to find another VP position after being terminated from Apex under circumstances that included IRS employment tax investigations. "Jordan," he said awkwardly. "How are things?" "Excellent. Left Apex last year to join a competitor. Better compensation, transparent commission structure, and management that understands employment law and tax compliance. I heard you were the one who reported the commission situation to the IRS. I reported that my W-2 showed income one didn't receive and that the company was withholding employee commissions without proper documentation or tax reporting. The IRS investigated and apparently found significant compliance problems. Turns out when you steal from employees and misreport it to tax authorities, there are consequences. I was just trying to improve operational efficiency. You created a slush fund from stolen employee commissions and paid yourself bonuses from it while reporting W-2 income you hadn't actually paid to employees. That's not efficient, Derek. That's fraud." The lesson isn't about revenge, though watching Derek's career implode because he thought stealing commissions was a legitimate business practice was deeply satisfying. The real lesson is simpler: when employers steal wages and misreport them to tax authorities, they create problems far bigger than the original theft. Derek thought he could withhold $24,200 from my commission, call it resource allocation, and face no consequences. What he didn't anticipate was that wage theft creates tax reporting obligations, that misreporting employment income to the IRS triggers audits, and that employment tax fraud carries penalties that multiply the original theft many times over. Thanks for staying through this story, everyone who understands that tax authorities are remarkably effective at recovering stolen wages when employers are stupid enough to misreport them. If this resonated, if you've had commissions stolen or wages withheld, subscribe and share your experience. These workplace justice tales remind us that documentation protects us, tax reporting creates accountability, and sometimes the best way to fight wage theft is letting the IRS collect what's owed. Your earned compensation doesn't disappear because someone steals it. The paper trail proves what you're owed, the tax authorities enforce compliance, and sometimes the person who steals from you ends up paying far more than they took.